Nenad here, Forex trader and founder of Desire to Trade. Welcome to episode 85 of the Desire to Trade podcast. This week, for the episode, I've been sitting down with Nenad Kerkez, a Forex trader based in Croatia, whose analysis are really detailed. I've been reading the kind of stuff he's doing, and it's really high level. So I wanted to bring him on the show to hear him talk about how he's analyzing the market and what are the things you look at. Nenad has a pretty good sense of humor, and he really got me when he talked about the Holy Grail of trading. You'll see in the interview. I won't talk too long for this time, but help me welcome Nenad Kerkez. Nenad Kerkez, welcome on the Desire to Trade podcast. How's it going today?
Hi, Etienne. Nice meeting you. It's been pretty much fine. And as you can see, markets have been very hectic and moving a lot of these days. But fortunately, spring has started. The sun is shining a bit. And I can say that it brought me some nice trades that I shared with traders all across the internet. So I'm pretty much happy with the start of March.
Nice. And we have a question we ask the guests at every podcast. What is one quote that you like?
Basically, the thing is, I started trading when I was like 30 years old. And honestly, I started to trade pretty much on live account immediately. And the biggest thing that I learned from the start is that no one should start on just trading on live account immediately. So then I actually quit my live account because I had a margin call immediately, of course, after a couple of days. And I decided to actually involve much deeper in trading. And that is the time when I actually start to invest a lot of my time in markets. And that is the time when I actively learn so many things, and I've been learning really a lot. We are always learning some new things. But basically 10 years ago, that was the start of my trading career. And I can say that so far, I'm very happy with it, how it has been going.
I feel like this is really a common mistake for people starting out to go live like as soon as possible. They want to be able to make money fast. So I want to go back in time a little bit and tell us, how did you start to trade exactly? Like, how did you hear about trading in the first place?
Well, I was actively involved in a hedge fund, but I didn't trade anything. I was actually promoting a hedge fund. Basically, that was a fund from BNP Paribas Bank. It's a very famous bank, one of the most prominent Euro banks, BNP Paribas. And they were actually offering different funds to investors, to all kind of investors. Those were like mid-risk funds, low-risk funds, high-risk funds. And basically, funds were making in between 10 and 30% per year. So my job was to find clients for their funds and to explain what kind of investment they can expect, what kind of return of investment they can expect. So my job was to find clients. And then during that period of time, I actually wanted to know a little bit deeper into the subject of funds. And then I stumbled to Forex. Of course, Forex was just one of the things that their managers and their traders were doing. But actually, I was pretty much interested to see how it all goes because I have a master in economy. So I wanted to get a little bit deeper into the financial markets, not just as a theory, but also in practice.
Yeah, pretty cool. And I guess, like you said, you didn't succeed at first, right? So how did that look like, your first few months of trading?
Well, my first few months of trading were actually, I can say the first few days or first few weeks were pretty much the same as with every new trader. Usually at the beginning, as Paulo Coelho said in The Alchemist, basically you have the whole universe usually unifies and is trying to help you. So basically I had a bit of luck in those first couple of days. Let's say weeks. But then, of course, it's the markets. We all know what is the Holy Grail in Forex trading. I will come up to that later. But let's say that my money management was pretty noobish. And of course, I lost all of my account. And then I decided that definitely that is what I want to do. I didn't start with that sentence, I want to beat the markets, because it's one of the stupidest things we can hear all over the internet, people saying how to beat markets. You cannot beat markets. It's nonsense. Because markets are made of big players, big hedge funds, pension funds, central bank. It's the system. It's the system for itself. So you cannot beat it. The only thing what you can do is actually you can follow it. So I can always compare it to the shark. Market is the shark. You're a small fish that you're actually following the shark. And I'm not referring specifically to the central bank or to commercial bank who are trading. The shark is the system, the overall system. Mm-hmm. So you need to follow it. And my first months of trading were actually, as I say, first it was a success, then it was a failure. And then I traded on demo account let's say I traded on demo for a year until I actually started to be profitable. And until now, I have that demo market statement where actually that is my guidance always to remind me how I started. And that account was, of course, a year and a half old, and it was pretty much successful. And my own theory about trading on demo accounts, guys, you always need to trade on demo accounts the same as if it were for a live account. Because if you plan to invest 50,000 euros or dollars, then trade them on 50,000. But do not trade them on 50,000 if you plan to invest 500. It's nonsense. You need to get a feel for it. You need to feel the market, and you need to practice it. Only then, there are so many things, but actually if you treat your demo account as if it were for a live account, that is the first step to making you a profitable trader.
That's a pretty strong statement, and I totally agree with this. But I just want to know, when you went from demo to live, did you have like a specific point at which you transferred to your live account? Or like how did you decide in advance?
Of course. And no, after I lost my account, then I started to demo trade it. And I will be honest with you, I spent 8 hours per day, 8 hours, literally, hiding from my boss at that time, because as I said, I worked for a company, for a firm, for let's say it was a company, an outsourced marketing agency, basically, who worked for BNP Paribas. And I was actively hiding from a boss. Whenever he starts to come in my office, I press my Windows button because I was so in love with trading and I was so into that. But of course, we couldn't officially do it on our day job. So I spent 8 hours, my working hours, constantly staring, following the markets. And then when I get back to my home, I spent another 3 to 4 hours. Literally, I'm not lying. I was so into that I actively wanted to come deeper and deeper into the subject. And it happened for a full year before I switched to live account.
That's really awesome. But how did you decide?
Yes, it's dedication. It was total dedication.
Yeah, exactly. How did you decide that you would switch to your live account? Was it like a point you just thought, okay, I'm going to switch now? Or
of course,
like when I'm going to be at this return, I'm going to switch. How did you decide?
No, I was basically, until I was sure that I can trade it successfully, then I switched. And the only thing that gave me that insurance was my statement, because I treated that account as if it were for a live account. The psychology, risk management, different trading methods that I have also developed, so I could see which method works, which not. And basically that was the time when I started to develop practical naked trading, PNT method, that later evolved into CAMMACD, the method that I use today as a sort of intraday, intra-week trading and analysis method.
Okay, I want to expand a little bit on this also. The idea of trading your demo account like a live account. How do you treat your live account today?
Well, the same as basically I don't have a single live account. Because maybe you don't know, but I'm actually a trader, or also not just an analyst. I trade with Admiral Markets, and I do the analysis for Admiral Markets each day. Admiral Markets is the top European broker. Really, it's been the evolution with Admiral Markets is I have actively evolved with Admiral Markets, making the analysis for the company, advising traders, making seminars, webinars all over the Europe. And actually, I feel really as a part, not just of the company, but we are like one body at this point. We have so much common things to do, and it's a very, very, very honest and fully regulated broker, has all FCA license and also other licenses, MiFID and ASICs, and it's present, as I say, all over the Europe and Australia. But the thing is, I need to say, I don't have only one account, because I have a different portfolio. Every person, every trader needs to have his or her own portfolio. You cannot say one account. What does it mean, one account? Because sometimes you can open different accounts. For example, I have a bigger account, and I managed to make let's say that I actually managed to bring the account from 50,000 to 64,000. And I made it in 3 to 4 months. So now I stopped trading on that account because that is who I am. That is how I do. I don't trade. I don't want to give profits back to market. So actually that is, let's say, a little bit bigger account that I hold with Admiral Markets. It's not that big. It's 64, but it's okay because I have also smaller accounts, a lot of smaller accounts that I want to build up. And I have my own project called low to high build up where I deposit, let's say 500, 600, 700 euros, and then I build it up to 3,000. I withdraw the money and so on. That is what I like to do because it keeps me constantly in the trading mood. For those bigger accounts and that bigger account that I currently have, well, let's say that I made my profits and now I stopped trading it. But just to make sure, I also traded with hedge funds and with higher accounts. The biggest account that I traded with was 150,000 GBP pounds. And it was also, let's say, a bit of, well, it was, I guess, a bit of interesting to trade because the money that you see with your trades it moves much, much higher than when you trade with retail accounts. Every account that is higher than 100,000 is not a retail account. It's not considered a retail account. So yeah, it was like 150,000 GBP pounds, and I was happy with it.
Mm-hmm. I just want to focus a little bit on those smaller accounts because I know people like listening to this are going to hear you're moving 600 to like 2,000, which is like 200%.
Yes, I have also account statement. So if a person wants to see my account statement, I'm always glad to send it. I also took screenshots from IFX book. Well, that was, I need to say this is not just a job for me. Like I'm working this because I have a degree in economy and I am an analyst and trader. This is what I love to do. This is my life. This is what I'm in love to from the first moment I came into this business. And I will never accept the fact that 90% of traders are losing and 10% of traders are winning. It's pretty much very, very subjective. People, I can talk about this for 2 or 3 days. I mean, we can make a seminar about educating people how not to lose money because every single time it happened to me during my trading career, I identified it and I know why people lose accounts because it happened to me. I have learned everything on my own example. So smaller accounts are a good way because if a person can afford to lose 500 or 600, it will not, let's say, have a big impact on their wallet. So, but before they actually invest 5 or 6, they need to trade on demo account pretty much, as I say, treating it as if it were for a live account and treat it exactly the same because that kind of account does not need to be topped up. Either you will make it or you lose it. It's not like 10, 20, 30 or 50,000 account that you need to top up if you actually have a big drawdown because big drawdown is very hard to manage. If you use leverage, that is one of the biggest advantages in Forex trading, the leverage. You can make it up even if your account drops from, let's say, 500 to 100 because leverage, you need to know how to use the leverage. Effectively, leverage 1 to 500, we have it with Admiral Markets. It offers you to actually if you know what you're doing, of course, you can pretty much make it up for all of your drawdown and come back in profits. So you need to exploit the use of leverage on smaller accounts. You cannot trade smaller account with small leverage.
Right. That's a topic we'll have to dive into a little bit though, because I know a lot of people want to turn like small account into big amount of money. But the problem is they're probably going to fail, right? Because they don't know how to do it. So how do you do it exactly?
But to be honest, when I say low to high, I mean, still it's a bit success for me that I managed to a couple of times and now I'm on my 4th or 5th time bringing the account up from 5,000 to 3,000. It's not big money. I mean, it's like a normal wage for most European countries, like 2,000, 3,000 euros. It's not much. But let's say that if you put, let's say, 500 euros in the bank will give you, your return of investment would be 1% in a year. But here we had like actually making more than 100%, 150%, right? Even 200, 300%. So how much time would it need for a bank to give you such kind of ROI?
You'll be dead by then for sure.
Of course, we will probably be dead. So that is what I'm saying. In the terms of money, it's not big, but it's terms of your own satisfaction. It's good because if you can manage to make it yourself without putting your money to the bank or whenever with some sort of interest, you're good to go. And I actually managed to do it in 4 weeks by using the leverage because I personally can afford to lose 500 euros. It's not about how much I will win. We should not focus on how much we are going to win. We need to think before we start to trade how much we are going to lose. Are we capable of withstanding that loss? Is it our savings? Is it the money that we can afford to lose? Should I give 500 euros to Forex market, or should I go now to, let's say, I don't know, Armani or Versace, and let's say buy a jacket for 500 or 600, or let's say a Boss or whatever brand you like? It's your own choice. I would rather put now at this point 500-600 and make 2,000, 3,000, withdraw the money, and I'm okay. Mm-hmm. I will buy 5-6 jackets instead of buying one jacket. Just an example, I mean. That is how I do with that small amounts of money. For bigger amounts of money, well, let's say chunks like 10,000, 20,000, 30,000, well, you need to reinvest it, or you need to think where you should reinvest. Currently, we are also having our own project that is highly connected with the lead currency, our own website, and we will reinvest some of our profits. I mean, because I have also my colleague, Chris Warzik. We are working together, and we are educating traders. So we are actually developing expert advisors. We are developing some customized systems and indicators that we test always with live account, because whenever we make a system, we test it on live accounts and so on. So there is a lot of things going on. So that is kind of reinvestment you always need to think about.
So, but the advantage of this is that instead of risking your money by putting in, like, instead of having a big trading account where your money is with a broker, your money is in your bank, right? So it's kind of safe, a little bit more. And then you trade with a little bit of money every time. That's right?
Yes, of course. I mean, I have, as I said, I have different accounts. I have bigger account. I have also a couple of small accounts that I try to build up. And you need to know that for a fully regulated company such as Admiral Markets, you have a guarantee up to 50,000 if something goes wrong. Of course, not by your own fault, but if the bank, something happens to the bank, your money is secured, it's segregated, so you can always feel safe with 50,000. That is why I make a deposit of 50,000 at most.
Okay, that's interesting. And so,
yes, of course, you're protected as a customer always.
Yeah. So I see the difference between someone like yourself and someone like a beginner who's because beginners, they want to have a small account and like make thousands of dollars. But the difference is
but
you have an edge and you have your strategy in place, right?
Yes.
So even if you lose the account,
have not just a strategy.
Restart.
At the end, I need to interrupt you, sorry, but it's not strategy. It's a trading plan.
Right, yeah.
Strategy is just a strategy. It cannot help you much if you don't have a trading plan, because trading is business. So whenever you start to trade, you need to have a plan. But it's the same as with every other business. If you plan to, let's say, run a company which sells cars, you need to have a plan. Where would you advertise? What is your market? You need to have a professional who will do business plan. So whenever you start to invest money, be it 100 or 100,000, you need to have a plan. Without a plan, you're a failure.
And your plan might have many strategies, right? Not only one, because you have different markets and everything.
No, there are different strategies, of course. Exactly. My primary strategy is CAMMACD. But CAMMACD is focused mostly on intraday, intra-week swings. But if you want to make something out of intraday, fast intraday movements, then you need to employ either breakout strategy, scalp or scalp swing strategies. So that is why we have different approaches to different kind of markets. I personally know a lot about indices or equities, but I don't trade equities mostly because I'm focused on Forex market. I don't deal with stock market at all. Just I'm following equities as a group of stocks, but not individual stocks market. I mean, I know about it because it's my job to know about it, but I don't trade it. It's different. When you make an analysis, it's different. It's totally different to trading, because the analysis is, it's analysis. You give your own opinion, but with trading, you need to think like you need to be money manager, you need to be a risk manager, you need to have a proper psychology. I was also working with a UK investment company, trading firm, and in our team, I was a head trader, but I always needed to listen my risk manager, my analyst, because that is the team. And when you trade for yourself, you're both analyst and manager and risk manager. You're holding it all.
Yeah, interesting.
Yeah.
You mentioned earlier in the interview about the Holy Grail of Forex trading. Could you expand a little bit on that and tell us maybe what it is?
Of course, it's a very simple question. The Holy Grail of Forex trading exists, and Holy Grail of Forex trading is good strategy. You can find good strategies on the internet for free. That is the Holy Grail of Forex trading.
And
I almost got you at the end. No, of course I'm joking. Guys, good strategy is just 0.20%, or let's say the maximum 10% of your success. Holy Grail is money management. Success comes down with a proper money management. So when you want to be successful, you need to have I call it tripod of successful trading. Profitable trading strategy, proper trader psychology, and proper money management. Proper money management is the most important out of all important things in Forex trading. And the biggest problem with new traders and beginners is that they actually, first they want to make money and then they want to think about money management. It doesn't go like that. So money management is absolutely the holy grail of Forex trading. And I have proofs for that. I can even send you the statement where 30% of trades were successful, only 30%. So it's not even half of trades. But that account grew from 5,000 to 10,000 in a year with 30% successful trades. Why? Because money management is correct.
Yeah. So what are the basics of money management?
There is no one who can tell me otherwise, because I am the living proof for that.
Right.
And I can testify always. Money management is the holy grail in trading point. There is no other thing. Strategy is there to help you make decisions. We have, let's say, indicators. And indicators will tell me, okay, Nenad, you have a profitable entry. But whether I will take the entry is up to me. Because the strategists are robots. They tell you, okay, now you have a signal. You as a trader should assess the signal. Is it a good signal or is it a not good signal? Because if every signal was good, we would all be millionaires, right?
Yeah.
It doesn't go like that.
So like if you could, let's say, buy every time the RSI is oversold and it would work all the time, you would be rich. But it doesn't work that way.
That's nonsense. What RSI, oversold? Guys, all of these kind of things, RSI, overbought, MACD, oversold. I mean, I also create indicators with my coders. And I know so much about indicators. There is no such thing as RSI, overbought, oversold, good trade. It doesn't go like that. Market is a living entity. You need to assess market from a different perspective. That is why I have POC zones with Camarilla. Points of confluence. If you want to have a profitable entry, there is a confluence. I personally make a confluence from price action. The only indicator that I have is Camarilla and it's MACD on my Camarilla MACD, because you need to compare historical buyers versus now moment buyers, or historical sellers versus now moment sellers. You need to watch multiple time frame trends. You need to watch Fibonacci. You need to see where the price was bought in the history and to compare it in now moment. All of these things make for the zone. You trade in the zone. You don't trade when RSI line crosses 50 or 70 or 30. I mean, do you really think that bank traders trade when RSI crosses 70 or 30? I mean, the blue line can give them money, right? No, it doesn't go like that.
No, there you go. But you mentioned it. Successful trading is all about confluence. And that's a big key, I think.
Confluence is the key. Of course, it's only the step, because confluence can give you a good entry. Of course, we want to have good entries. We don't want to trade with 30% of successful trades. Although, as I said, I have a statement that can confirm that 30% successful trades are still profitable because the strategy was not good, but money management was good. But my goal is to have profitable entries. That is why people are following me on Twitter. That is why I hold a lot of seminars and webinars, because I always trade with confluence. POC zones. When the price gets in the zone, we either buy or sell. That's the confluence. Trend lines. Price action. Price action is the king. Mm-hmm. And indicators can be, and they're good if they follow price action. But you need to assess the signal from the indicator. You cannot trade it blindly. If RSI crosses 70 up from below, is it a good short entry? It depends. If the market is at strong resistance, historical resistance, if that is proven on higher time frame trends, probably that's also retracement, because market is in uptrend. It came to resistance. It's retracement. It's not reversal. So the trade needs to be assessed from other perspective. It's not full swing trade where you can earn many pips. You need to treat it as retracement, because when it comes to the next Fibonacci level, it might reject and make an end pattern that will turn the price again to the upside. Yeah,
exactly. That's really well said. So could you give us an example of how you assess a trade? Like, what are the things you look at and what makes a good trade for you?
Well, it's pretty much, it's a science now. I mean, I need to elaborate for a much longer time. But in short, I watch for the zones. My favorite intraday time frame of trade is 1 hour time frame. But of course, I'm watching 4 hour for confirmation. I don't watch daily except for daily close. Then during Asia session, I start to, let's say, watch what after Asia session, because I need to sleep during Asian session. When I wake up, I always watch the range of Asian session. Then I compare it to now moment. I switch to higher time frame. Then I see what the overall trend is. Is there something that can stand in between trend and technical analysis? Usually there is some big events like Fed announcements, ECB announcements. Those major news can actually move the price out. So I need to be very careful about it. I'm not specifically referring to news that are colored red on ForexFactory calendar, because major news are Fed announcements, bid rate announcements. Whenever a central bank needs to hold a conference due to bid rate announcements, is the major news for me. Every other news is basically tradable. It can mingle up with trend, but then when after a new spike, the trend gets back into its tracks, in predetermined track. So what I do is I use Japanese candlesticks, I use trend lines, Fibonacci's. I have my own price action trading school course. You can find it on Admiral Markets channel. It has a lot of lessons, and that is basically what I try to look at when I assess the markets. When I see a confluence of, let's say, a trend line, Camarilla important pivot point, Fibonacci 56.878 or 88.6, X cross of trend line, then I can identify the zone easily. The zone, I call it POC, it means point of confluence, and POC zone is the zone literally where we place buy or sell depending on trend. So whenever you read my analysis, you will see POC. So for traders who are new, it's where you can place your trade, where I place my trade, in the zone. So I am not looking for a specific level, let's say 1.3120. My zone usually has 15 pips buffer, so it's like 31.10 to 31.30. So that is a zone. If it drops below, it doesn't matter. It's a retracement, but we need to respect stop loss. Stop losses are never moved. That is, it's called scaling in. So you can always scale in if the trade goes deeper in the zone. And by scaling in, your profits go exponentially up and your losses go exponentially down.
Yeah, that's pretty interesting. And then how do you manage your money with that? How do you do risk management?
Like banks. I always trade with banks, because when I started to trade, and I also, one of my best trading buddies, he's a full-time trader, and he was also working for a Citibank in a risk compliance. He knows a lot about trading. I learned a lot for equities from him. And actually, he told me that banks always do profit stops. And that is what I also do. I have my own profit stop management, because my goal is always to trade like big fish. I cannot put myself into a simple retail trader who follows a system. As I said, I created a system. I teach people how to trade, how to fish. So I also teach them how to trade like big fish do, sharks. So profit stops are always when you're in a trade, and especially if you're in intraday position. You know that there is some big news kicking in. You should protect your profits, because it's gambling. You don't know what Fed will do. So now people would say, okay, it's all been priced in. But if everyone knew that Fed, because everyone knew that Fed will hike, right? But everyone knew that the euro dollar will jump so high and dollar yen would drop, everyone would be millionaires. I mean, everyone would be probably selling their homes, houses, and invest in forex market. And they all would be millionaires. I mean, everyone is smart after the fact. So I'm not smart after the fact. I try to be smart pre-fact. So I knew that, and I also produce expert interviews with forex3.com. I'm also part of forex3.com, where I actively place my analysis, upload my thoughts. So my opinion is, I knew that they would hike, of course. But the thing is, I expected a much higher rejection of dollar yen from 113.50, because dollar yen generally is still in uptrend. So I'm still in a position of dollar yen. It's only 1% of risk. My stop loss is 111.50. Now, currently, my trade is 0.50% in a drawdown, but it's the thing that I did live, and I traded live. So, I always do prefect. So the thing is, what I wanted to say, when you are in profit, you need to use profit stops. For swing trades, like 1% of risk or 1.5% of risk, it's not that important, because if your stop loss is hit, you will lose only 1 or 2%. But for, let's say, intraday trades or intraday scalp trades where you use a bit of risk, let's say 2 or 3% in a trade, I don't advise using more than 5% of your account. So if you have 2 or 3%, or 5%, you need to protect your trade. Because if you have 20, 25, 30 pips, and you see that market is going to important intraday support to resistance, you need to move your stop loss, securing 20, 25 pips. But for that, you need to have a profitable strategy. Because if your average stop loss is 35 pips, your average win is 15, 20, or 25 pips, your win-to-loss ratio should be approximately 70%.
Right. Yeah, that's the big key. So you have to combine.
Everything is math. Math is the oldest thing in the world, like 5, 6, 10,000 years before century. Even Egyptians and all Sumerian civilizations knew a lot about astronomy and math is the basis for every single thing.
So you have to combine win rate with your reward to risk. That's important also.
That's the simplest. That's so simplest explanation. Because the most successful expert advisors, robots, are not, we know about high frequency trading robots, but you can also make your own robot which can only follow your money management and protect you by using different math algorithms. So when your trade is in a loss, it can actually reverse your loss based on some math algorithms and principles. So we are currently working on that kind of expert advisor, which will turn losing trades into profitable trades. But what the most important thing is, you need to have enough margin to cover it. So probably the lowest amount of currency you should have on your account is $1,000 if you work with 0.1 lot size. If you work with 0.01, with that kind of expert advisor, you need to have at least $200 or $100 strategy, $100 account. So everything is about math. That is one of the projects we are currently working on.
Cool. That's interesting.
Yes, it's cool.
Any other advice you would like to give for traders?
I have a lot of advices. Guys, at the end, thank you for this kind of opportunity. But if you want me to give advices to traders, you need to organize 2 or 3 day seminar in Toronto or whenever you want in Canada or US or wherever you are from. So I know you live in Canada, so that is why I say Canada. So I can talk about it for full 2 or 3 days. A lot of different advices, guys. First advice: follow me on Twitter. My handle is Tarantula FX. Follow me on Facebook also. Visit my webinars with Admiral Markets. I have a lot of traders from US and Canada. I have live trading webinars on Wednesdays. It's 13:45 GMT. It corresponds to New York time, so New York traders can also kick in, trade with me. I also have trade setups on Mondays. It's called Monday Session Recaps. I have more than 150, 200 people on my webinars each week. And the amount of people are constantly growing. It's a good time for you to come to see my setups. I give you free advices, free setups with clear levels, entries, and stop losses. So that is the shortest I can think of at this point. And follow me also on Forex Street, where I usually put my interviews and also educational videos. I also have a thread on ForexFactory, but today, most of the time, I repost articles that I already do because I'm very busy, very, very busy.
Nice. And what kind of goal do you have for the future?
For the future, well, my primary goal is to set up a good relationship now with my own elite currency. That what I do, and also I'm trying to connect it to, of course, Admiral Markets in such a way that traders who open up an account with elite currency, they can also enjoy different things and programs like special privilege package. You can visit elitecurrency.com. And you will actually see all our what we offer. It's elite currency, but it's you will paste it on your website, so traders will be able to join to see what kind of education we offer. Of course, we are also working on expert advisor, as I said, which will turn losing trades into profitable trades. Also, we are focused on making one more intraday to intra-week scalp system that can be used for beginners. Not intra-week scalp, but intraday scalping system that can be turned into intraday swing positions by using profit stops that I explained about. So that is our goal. We are currently working on it. It's in testing phase until I see a good statement from it. First on demo, then on live account, it won't be published. Only when I see a live account that is pretty much successful, I will publish it on my FX book, print out myfxbook.com statement, and this statement will be used to show traders that that system is actually traded live and that is successful. But in order to trade it for a full 2-3 years, you need to follow up the rules. Simple as that.
Nice. And I just want to remind people that all the show notes for this episode are going to be on thisartoftrade.com. So if people want to find the links we talked about, and if they want to find you, they're going to be able to find you there. It's going to be pretty easy, thisartoftrade.com. And Nenad, we have a question we ask a guest at the end of every podcast. If you could give only one sentence of advice for traders, what would that one sentence of advice be?
Don't risk more than 5% of the account per trade, because if you go with more than 5% of risk per trade, your account will be in danger zone. You need to be clear with it. 5% means that you're willing to risk 5% in order to win. If you want to make 100% ROI, return of investment, you need to risk your whole account. So actually, you need to be ready to wipe your account if you want to make 100% of ROI. So my advice is, guys, use the leverage smart way. Go with the low risk, but then again, use the leverage smart way when you need to recover from a drawdown.
Love it. Nenad Kerkez, thanks so much for being on the podcast. It's been a pleasure to have you here.
Thanks, Etienne, and been a pleasure to speak to you. I hope that we will meet soon.
There you have it, guys. My interview with Nenad Kerkez. I really hope you liked it. If you guys want to connect with me after the show, make sure to check out the Facebook group over at thisartoftrade.com/group. And I also realized that we've had 85 traders on the podcast, which is really awesome. It's not 100, but close to it. But if you guys really want to learn about trading, make sure you check out the last interviews, because there's a lot of stuff. There's a lot of different traders, a lot of styles. So you're pretty much sure to learn a lot from those interviews. I look forward to see you guys next week for the episode. And until the end, have a nice trading week. Keep learning, keep trading. And I'll see you guys next week for the next episode of the Desire to Trade podcast. Ciao.
Thanks for listening to the Desire to Trade podcast. To get all the information on this show, free articles, and unique resources, make sure to check out www.desiretotrade.com and subscribe. Please leave us a review and let us know what you thought about the show. It's time to become the best trader you can be. See you next time.